Give us your take on the quarter. It really seems like that Mark Zuckerberg and Meta, they're really walking what I kind of see as a tightrope of efficiency, but also growth that's going to excite investors.
Yeah, that's exactly right. And this is where really an element of contradiction comes in. A huge part of the rally that you've just been discussing there. The market is relieved that cash is being funneled towards more traditional areas of the business. That's what really kind of kicked off the initial rally. So what we're now hearing is a lot of this chatter about AI and more exciting projects coming through, but actually the exact plan for that spend and what exactly AI will look like for Meta is a little bit woolly. I would say it's not as clear cut as some other tech names. So really, I mean, when you talk about the earnings specifically that we've just had, it was a really, really resilient quarter. The market is very relieved to see a moving advertising line. It's moving in the right direction for once. But really, I would be watching this commentary around AI very closely because the market is going to react negatively if Zuckerberg gets too carried away with those spending plans again.
All right, so speaking of spending, I'm looking at Reality Labs. It brought in $339 million, but it also lost almost $4 billion. What do you make of that? How long are investors going to continue to tolerate losses in that unit?
Precisely. This is a huge question, and I think it's indicative of this idea that Meta have become very good at saying a lot of exciting things, but actually you're absolutely right. The track record for these more kind of outlandish, these more exciting growth levers, and the performance is not stacking up against expectations. And I think for now, because there's been such extensive pullbacks in spending and this boost on efficiency elsewhere, the investor base is a bit more tolerant of these sorts of losses, but it certainly can't carry on forever. You tack that onto the fact that, yes, we saw revenue grow, but it was only 3%. 3% revenue growth for a stock like this is very slow. So patience is going to run out at some point, and it could be soon.
Okay, Sophie, stay with us for a second. I want to turn to Amazon, set to report results after the close today, capping out a very busy week for tech earnings. The focus for investors, the company's outlook for consumer discretionary spending, its recent cost-cutting initiative, and the performance of its cloud division, AWS. So, Sophie, what are you expecting from this report? Will AI be important for AWS as well?
It certainly will. I don't think it comes as a surprise to hear me say that I'm expecting Amazon to be shouting about AI a bit like everybody else has this week. And there is actually quite a good reason for that. AWS is really well geared towards this AI boom, and that's because it's positioned in an attractive place in the cloud ecosystem. So it's very much geared towards the infrastructure, the implementation side of this kind of booming tech. The applications, the app side is a little bit more limited, but I think that this place that it has in the infrastructure and the potential upside there is very exciting. I expect them to be talking about that. The level of granularity, obviously, will be up for debate, but they'll certainly be talking about it. For me, the really big thing, and I think everybody that they'll be watching for, is that EBIT margin, those operating margins. At the moment, they're pegged to be 2.4%, which is very low, and a miss there would be pretty badly received, I think.